Africa Investor Today is proudly brought to you in association with Petro SA and Afrexim Bank. Hi there and welcome this Wednesday to Africa Investor Today, where we bring you the latest news on African business. To start this bulletin, we bring you news on politics and economy, where Botswana has been placed among the top performers in the 15th Annual Index of Economic Freedom, which was published this week by the Heritage Foundation and Wall Street Journal. The index measured the level of economic freedom in 183 countries, focusing on 10 specific categories of labor, business, trade, fiscal, government size, monetary, investment, financial, property rights, and freedom from corruption. With an improved overall score of 69.7, Botswana is now ranked 34th in the world and second in Africa after Mauritius, scoring well above the world average on 8 of 10 economic freedom areas measured. Moving to news from Madagascar, where the transitional government has welcomed African Union calls for another round of negotiations to resolve the deepening political crisis. The continental body announced Monday it would convene a third meeting of the International Contact Group, most likely on October the 6th, to address the crisis in the capital, Antananarivo. The opposition, including several former presidents, wants a new format for the AU-backed negotiations. We continue with more news on companies and markets right after this.
Redefining energy means redefining life. At the Petroleum, Oil and Gas Corporation of South Africa, our commitment to greater innovation and greener fuels has made us pioneers in the field of gas-to-liquids technology. It has also earned us worldwide recognition for producing the cleanest fuels through environmentally friendly processes. That's how we've become the international leader in diesel technology. Through pure innovation, pure energy, pure brilliance.
In companies and markets news, India's Bharti Airtel has offered to retain the top management at MTN for at least 3 years and given the option of an all-cash offer to minority MTN shareholders to sew up the planned tie-up between the two firms. This was reported by the Economic Times, who also said that a person familiar with the revised tie-up said MTN would get a 27% stake in Bharti instead of the 25% earlier proposed. Bharti would also cap its holding in MTN at least to 49% for at least 5 years. These moves would pacify the South African government, keen on retaining MTN's national character. In news out of Kenya, Olympia Capital Holdings Limited, a building materials supplier and investment holding company, today said profit in the half year to August 31st was 16.7 million shillings. Sales were 230.3 million shillings. These figures were provided by CEO Michael Matu. The company didn't provide first half earnings for the year. We're going to take a small break. We'll be back with more news.
Afrexim Bank is Africa's leading trade finance bank, an organization dedicated to promoting African trade through credit, risk-bearing and advisory services. We pride ourselves on having local presence throughout the continent and are committed to extending our award-winning trade and project finance programs to unlock private sector development continent-wide. We invite you to become a part of our vision for a strong Africa in a changing world. If you trade within Africa, contact us to support you.
In banking and finance news, Kenya's central bank will probably keep its benchmark interest rate unchanged tomorrow after reducing it 4 times since December on concern that fuel and food price inflation are on the rise. The central bank will leave the rate at 7.75%, according to all 5 economists surveyed by Bloomberg. It has lowered the rate by 1.25 percentage points since December and slashed the level of cash reserves that commercial banks must save to 4.5% from 6% to boost lending. Kenya's underlying inflation rate, which excludes food, power and transportation from the calculation, declined to 7.3% in August from 7.9% a month earlier. The central bank targets underlying inflation at 5%. In other news, according to the Community Secretariat, a joint study on the proposed harmonized monetary union has already kicked off and is expected to end this month. This week, the team spearheading the study, led by European Central Bank consultants, is visiting Bujumbura, where it will hold a consultative meeting on the proposed unified currency. Similar meetings have already been held in Nairobi, Dar es Salaam, Kigali and Kampala. The last one will be conducted in Arusha next week. Targeted in the study are the central banks of the EAC partner states and their ministries of finance, planning, EAC affairs and trade. Others are capital markets, bureaus of statistics and banking fraternities. With that, we take another short break. Do stay with us. We have infrastructure news up next.
Africa Investor, the leading African investment magazine, is essential reading for investors in Africa, filled with the very latest in Pan-African investment and finance news. In addition, log on to africa-investor.com to find out more about our exciting capital market, infrastructure and tourism events, and our long-standing investable Africa Investor 100 Index Series, which tracks over $600 billion of African equities. Doing business in Africa, you can't afford to be without Africa Investor.
And in infrastructure news, Kenyan entrepreneurs are defying recent trends to deepen their presence in the ICT industry, riding on the conviction that a second technology boom is looming with the potential of producing the country's next generation of tech billionaires. The group, made up of Kenyans in partnership with foreign investors, has in the recent months been going against the grain, ignoring a string of exits from the ICT sector to plow billions of shillings into technology ventures they are convinced will blossom into money-minting machines and key drivers of the economy in the next decade. Under this new wave of investment, local punters are expected to plow over 3 billion shillings into ICT ventures in the next couple of years. And Econet Wireless Zimbabwe Limited, the country's biggest mobile phone operator, will spend a further $30 million expanding its third-generation network. The Econet CEO, Douglas Mboweni, said the demand for 3G services has completely surpassed all projections. Third-generation technology will be rolled out to all parts of Zimbabwe by December. The expansion was authorized by parent company Econet Wireless Holdings Limited. And with that, we close today's bulletin. Do log on to www.africa-investor.com for more on these stories and others. From me, Avon Middleton, and the rest of the team, goodbye. Africa Investor Today is proudly brought to you in association with Petro SA and Afrexim Bank.